Have you ever looked at a crypto analyst prediction and just wondered, how on earth did they get there? Well, today, we're going to crack open that playbook. We're going to see exactly how they connect the dots, from the tiny details on a price chart all the way to global politics. Let's get into it.
I mean, that's the big question, right? How do you even begin to forecast the price of something as wild and unpredictable as Bitcoin? It feels like you're trying to nail Jell-O to a wall. Is it pure science, a bit of art, or just a really educated guess?
So, to figure that out, we're going to follow the breadcrumbs of one specific analysis. We'll start small, right there on the price chart, and then we're going to zoom all the way out to see how the wider world, even presidential statements, plays a role.
Okay, so here's our roadmap. First up, we'll look at the basic building blocks of this analyst prediction. Then, we'll get into the weeds of the chart itself, see what clues it's giving. After that, we'll connect it to the global economy, layer on the politics, and then finally, put it all together for the analyst's final take.
Every prediction, every market thesis has to start somewhere. It's built from foundational signals. And for this analyst, one of the most important ones is something called a CME gap.
So what in the world is a CME gap? All right, think of it like this. The big traditional futures market in Chicago, the CME, it closes for the weekend. But you know what doesn't close? Bitcoin. It trades 24/7. So sometimes a gap opens up between where the futures market closed on Friday and where it opens on Monday. For analysts, these gaps are like magnets. The theory is that the price will almost always be drawn back to fill that empty space.
And this isn't just a casual observation for our analyst. They put a number on it. A 97% probability that any CME gap will eventually close. That is a huge degree of certainty. It doesn't matter if the gap is tiny or massive. To them, it's pretty much a guarantee the price will go back and touch that spot.
All right, let's head over to the chart itself and see what's happening right now. And this is where things start to get really complicated, because charts have a funny way of telling you two completely different stories at the exact same time.
So check this out. On one hand, you've got a bullish signal. A brand new CME gap just popped up at $93,000. And based on that 97% rule we just talked about, that's a powerful signal pulling the price upwards. But at the very same time, the chart is forming a classic bear flag. It's a textbook pattern that usually suggests the price is about to drop. So you have these two reliable signals literally pointing in opposite directions. This is what makes short-term trading so incredibly tough.
Okay, so if the chart is giving us mixed signals, we need more information. And for that, we have to zoom out. Because Bitcoin doesn't exist in a bubble, it's part of the much bigger global economic picture.
And this quote from the analyst really hits the nail on the head. A lot of people hope Bitcoin will be like digital gold, a safe place to put your money when things get scary. But the reality, right now, is that the market treats it more like a high-growth tech stock. It's a risk-on asset. So what does that mean practically? Well, it means if Bitcoin acts like a tech stock, then the health of the stock market, specifically the S&P 500, is a massive indicator for Bitcoin's price. And right now, this analyst is seeing some red flags in the stock market. That correlation means that if they're worried about the S&P 500, they're also worried about Bitcoin in the short term. But we're not done zooming out. To get the whole picture, especially the long-term one, we have to go even further, all the way to politics. Because nothing can change the rules of the game faster than government action.
And the thing that really stood out to this analyst was a recent comment from President Trump at Davos. He specifically mentioned he was ready and waiting to sign a new crypto market structure bill. Now that might sound like just another political soundbite, but for the crypto world, that's a huge potential signal.
So why is this bill such a big deal? Well, it's designed to do one thing the crypto industry has been desperate for: provide clarity. It aims to finally draw clear lines. What's a commodity? What's a security? And so on. That clarity is the key to unlocking the next level of investment. We're talking about the big players, pension funds, university endowments, the kind of money that measures in the billions or even trillions that have been sitting on the sidelines because the rules weren't clear. This could be a total game changer for the entire market.
And that bill isn't the only thing on the political radar. There's an upcoming Supreme Court decision on tariffs. A new Fed chair is going to be nominated soon. Interestingly, the analyst points out that the frontrunners for that job are seen as pretty friendly to crypto. They're crypto bulls. That's a good long-term sign, but in the short term, all of this uncertainty just adds up to more potential market choppiness.
So, we've looked at the chart patterns, the economic ties, the political winds. It's a lot of moving parts. Now, let's put it all together and see what this analyst's final forecast actually looks like.
And what we end up with is really a tale of two completely different timelines. In the short term, the outlook is pretty cautious, even bearish. The warning signs in the S&P 500 and all that political uncertainty could easily pull Bitcoin down to the mid-$60,000 range. But if you zoom out to the long term, the picture flips completely. The outlook becomes incredibly optimistic, driven by that potential for regulatory clarity and the flood of institutional money that could finally enter the space.
And that brings us to our final question. When you see all these different pieces, the hard data, the chart patterns, the reading of political tea leaves, it really makes you wonder, doesn't it? When we try to predict the future of anything, how much of it is about the cold, hard numbers, and how much is about weaving all those numbers into a story that just makes sense?